you're doing well. We've got a trade of the day today that requires a little bit of risk on in the risk appetite. So if you are to take the trade of the day, you do want to be looking at your indices and VIX and things like that. Ideally, we have a risk on day. We might potentially have a risk on day from the 24-hour difference. However, it's very subtle, very slight shift. But it does tell us that it's slowing down. So we're going to have to see what the difference is tomorrow, and then see if we've got a big increment on this. If this does shift, this could impact the big picture, and this really needs to come down. This is very skewed. It's very unusual to see the retail guys so long on risk. Normally they're under a lot of fear, and they're selling because they think that's the right thing to do. However, they're not really believing the news, and all this scary news that's going on in the world. It's not causing them to short. So I guess price will have to punish them potentially. As a result, our trade of the day could be it could be bad. So just keep an eye on your risk, okay? And the bubbles are all great, they're fantastic, but we have to take into account fundamentals as well, because those risk on flows are more powerful than the sentiment, because we're just looking at a tiny portion of the market, where the risk on flows are, the big boys, and they're buying with their big pockets. And this is obviously an excellent way of looking at the market, but there are other things in play, such as those fundamental forces. So ideally, we probably want the pound down a little bit. Maybe you could argue we don't really want to be doing the top left quadrant really, and ideally we wouldn't do the bottom right quadrant, but we're just examining the distance between the two. Ideally, the pound comes down, ideally. So yields fell, which is good if you're bullish on risk. We don't want these to be pumping anymore. That's getting a bit outrageous, really. And you can see how inverted the curve is, and they pumped so much this year. It's just, it was ridiculous, and they never really did calm down. And these rising helps gives the USD a tailwind. It boosts the USD higher. So keep an eye on this little measure on the bulletin, and that should maybe forecast if we're topping out on the USD or not. So we'll have to wait and see what happens tomorrow, obviously. Remember, I've got Monday off because I've been very tired this week. So we're going to have a fairly long weekend. So I'll be back Tuesday, okay? So shifting, pound yen is a sell because there's a match. Not really a match on GU, as you can see. Oil is a match for a buy. That's just going all over the shop. Oil, it was a sell yesterday and now it's a buy. So it's just flip-flopping. AJ is a buy, but you want to be careful because you have the risk on nature of that particular instrument. It will rise on a risk on environment and fall on a risk off. So keep an eye on your indices, and we can check risk as well on Discord. Go on the side panel on the right there. Dollars make us strong, but we knew that anyway. And the GU is the laggard, and dollar CAD is now the strongest. And interestingly, they've got their stop loss. The SLC is at 1. It's at parity for the dollar Swiss. So that's of note. That's where they've got their stops. And oh yeah, okay, well that's fine. I was supposed to admit that, but I'm not going to retake this video. So this is our trade of the day. I'll talk a little bit about the logic. So the pound is moved sufficiently across this way to make it a buy, and the Swiss franc has moved sufficiently across this way to make it sell. So ideally we put strong versus weak. However, that particular instrument, this one, we kind of need risk on for it, because pound is more riskier than the Swiss. The Swiss is a safe haven. The pound isn't really a safe haven at all. It's quite risky, especially in this current dynamic where we've got the Bank of England wanting to press their foot on the brake, and then you've got Parliament trying to accelerate. And obviously there are forces that are counteracting each other, and it's causing a lot of uncertainty around the pound. So we have to think of the bigger picture. And it's quite risky currently. Maybe I'd put pound in the same category as the Kiwi and the Aussie now, because currently the setup there is quite fundamentally uncertain. and it could be, it would be a risky one to trade. So that's the logic there. Normally I omit this so you don't see the trade of the day. I just want to talk about the bubble logic. That's fine, but we're looking at things in the vacuum, and we can't really be doing that because there are other things in play, such as the risk on, risk off nature of the market. And we have to understand that fear and greed cycles as well. And we don't really want to be fighting a risk off mood by buying the pound Swiss. So we have to take into account fundamentals. So it's very important. Just like that. So this requires a risk on day. Okay, so by New York, if things are bouncing higher, then yeah, this could be a good trade to buy. Okay. If you want to join, there's the link. So that's fine. That's quite straightforward. Different tiers for different things. Basic is everything in Discord, and the FXSI QDB affiliation is Discord and the spreadsheet. And if you haven't got an FXSI sub, then you can just do premium and then just do the premium tier. But that's a discount for current customers of theirs. And so, the S&P it's falling. The MA is going to act as a resistance, like I said yesterday. Any test of the MA could be selling opportunities until this evens out and we see a bottom on the moving average. This is the 21 moving average, just so you know. This is a daily chart. And the little guys are long on a lot of instruments, and it might be that the UK 100 is the first one to flip because we're close to zero. Okay, so maybe this one be the first one that's going to make it a buy, and we'll have to wait and see. So yeah, I mean, they were quite skewed on a lot of instruments. So that's that. And see, they've gone long on the S&P. So by doing that, it's going to make price fall. So, that's bearish. It already was a sell, but they're buying. So it's adding to the big picture, which is bearish, right? So it already was a sell, but that's making more of a sell because they're going long. So this should be falling. Okay, so but I'll do a quick 2-minute video in the Discord, a private video for you guys. So that's if they go long, it's going to be a sell. Though we haven't got a crossover yet, but it looks imminent. Those two lines are interchanging. It looks like they're going to interchange. See there's the buy up here. We did flux a little bit, but then they sold it. Up we come. And DAX, likewise, they're buying the dip despite the horrible fundamentals of Germany and the Eurozone and the gas, Russia, all that stuff. They're buying the dip, which is something we don't want to be seeing. They should be selling, and then finally things will calm down. But they're long, so it's caused a lot of volatility. And so yeah, there's gold. Well, up we come, and hopefully it's clear why, And then it did do something like I said yesterday. Do you remember I was saying that we formed like this kind of bottom, and it looked like we might be doing this. Yeah, it's this sort of motion. So there was like the top. And then we did this, but we did it more than I anticipated, and they really did sell it. Up we come. So it's a bit like understanding the waves, really. So you saw a wave here, so it made sense there would be another one. Here was one, and then so it goes like that. We don't really want sentiment to go sideways because we can't see those waves. Hopefully that's clear. Okay, and it crash, retail destruction. Up we come. You can say technically that was maybe like a wedge break actually. Can you see? Channel break. Up we come. And so GJ is undecided, so that's off note, 50%. Dollar Swiss SLC is at 1, it's at parity, and the largest stock loss cluster is UJ at that location, 144.9, and it's fairly large compared to the others, and so I think we'll probably have to get that, and we'll have a BOJ intervention, and we're going to see another crazy day probably. And yeah, that's that. So be careful. This is terrible. Basically saying, hold on to your horses. Don't trade at the moment because they're currently paying the retail guys a lot on their pound, on their yen, on their CAD. Also, you could say on the Swiss and the euro. So they're getting paid a lot. So since this is unusual, we can't expect this to persist, and they eventually. They'll be trapped. So this is a trap that's being taken. In fact, I'm going to look at it now. Yeah, okay. So that would be normal because we're entering London, and that trap mechanic should be coming into play. So that should increase as we see as time progresses. That will get higher, and that will tell us that the retail guys are getting squished and they're getting squeezed. Yeah, so that's that. So wait for that to get higher, if you know, please, before you take the trade of the day. And then if you take the trade of the day, keep an eye on your indices. If things are in heavily negative, just avoid it. When I mean the indices, if they're negative. So yeah, we had an initial surge on that. So had you have called it, you would have done quite well. But then obviously it just dumped, and we had a negative result of -7. However, we have to be careful, as that setup required risk on flows. We weren't particularly risk on yesterday. We've got a lot of things going on in the world, and our risk calculation that's saying risk off too. Technical checks, we've got the strong dollar case, and that's been the same for ages, and it is boring, and the sentiment might be trying to get away from the technicals, but we just got such a strong headwind for these EU, GU, AU, NU, technicals just very, very heavy, and that's that. And so not that much. I mean, we've got some US data, we've got the inflation rate, but maybe we'll have a quiet day today, and hopefully we don't get any more central bank intervention. The BOE couldn't do intervention because they don't have enough reserve capital, but they can intervene in the bond market. This is what we saw in the gilts. But the BOJ can intervene. That's the important thing. So they're going to be watching UJ, and if we carry on like we are, then we're going to see probably a volatile day again. So keep calm, all trade safely. Remember, I'm away on Monday, but I'm around anyway. You can contact me on Monday. It's not really a problem. There's some links there, so click those. And I wish you a good day, and I'll speak to you guys quickly on the 2-minute video now.